Let's do some calls of the day. So Goldman has an interesting gaming call today. They say expect another tough quarter for Vegas. They still name Las Vegas Sands their top pick. They reiterate their buy. $80 is the price target there. However, they do lower Wynn's target to 140 from 148, and they reiterate the buy there as well. Jimmy, we go to you first, because I've ended on Wynn, and that's your big winner.
Yeah, well,
has been one.
It has been. I mean, it's come off a little bit. I'm thinking of adding to it. I had trimmed it not that long ago. But the thought process here is, let's be clear, Las Vegas is not doing so well. In part, that's because the comps were unbelievably difficult in the few years after the pandemic. I mean, everybody was there. And that has died off. There's questions about whether that's cyclical or secular. But if you look at Wynn, the reason to own Wynn, and also, Joe, to your Las Vegas Sands, is the Macau exposure. And even more than that, the Dubai resort, which is going to open up in less than a year, maybe a year, but should be less than a year. And that's where the real boost in earnings is going to come from. That's why I own it.
Joe?
So for us, the better trade is in Las Vegas Sands, and that's because of the balance sheet. We looked at Wynn. Unfortunately, for Wynn, you have negative return on equity, negative debt to equity. So for the quality factor, it didn't qualify in that regard. Las Vegas Sands, a newer position, established at the end of October. I think it's up somewhere around 2.5% since then. So I agree with Jimmy. It looked like they had really strong momentum. Each one of these stocks is kind of pulling back right now from the early December highs, and we'll see where it goes from here.
Okay, let's take Cummins. Take a look at this stock. They've downgraded it to peer perform over at Wolf. It was at Outperform. Joe, you own this name as well. They talk about it having materially outperforming over the past couple of years, but they do lower the rating. They expect strong earnings per share growth over the next 2 years. They still see improving fundamental backdrop. It's a valuation downgrade more than anything else, it appears.
Valuation's not that extreme if I look at it. I've got it at 30 times. Look, you could create a basket. It's United Rentals, it's Vertiv, it's Quanta, it's Fastenal, it's Cummins. It's all of these industrial names that are performing really, really well. So I kind of take the other side of that one. I see Cummins is doing well in the power gen business. They've got strong momentum, and they're delivering on earnings.
Tactical Outperform at Evercore for Boston Scientific. You own that one, too.
We do. It's been underperforming recently. A lot of the medical device names have come under a little bit of pressure recently. Thermo Fisher, Boston Scientific. We'll take a look at it. I can't say much more than that because we do rebalance on Friday.
Oh, okay, good. We'll look forward to that. What about Applovin? Got upgraded today, $700 at Needham. They say buy the dip in this name.
Yeah, it's the worst tech name that we own right now. I hope they're right on the dip. I know a lot of people say, well, it doesn't matter where you get in. It does, because it leaves us with a lot of room. July of 24 at $76. But the stock has pulled back significantly. And it's had several attempts to try and reestablish the positive momentum, and it just continues every time. It fails to do so. So that's indicative to me of a situation where more people are looking to exit than they are to actually enter. One thing to mention, 200-day moving average sits at 489. That would be an interesting challenge if it does get there.
Monster Beverage target 296 from 87, overweight, reiterated at Morgan Stanley. What do you think there? 3
consumer staple names that we own: Monster, Walmart, and Costco, which is kind of recovering nicely from really a fall of underperformance. I like the consumer staple sector right now, and I think these 3 names are the names that could be the driving force towards a good year in 2026 for the sector.
All right.